Ladies and gentlemen, Tesla stock down about 4% today, and it's really surprising because if anything, we have good news for Tesla stock today, including some more calls on the Trump administration to give an extended pause on tariffs. Bill Ackman today calling for a 180-day pause on tariffs. JR Research believes that Tesla's turnaround has real traction, and this is a 5-star investor analyst. Elon Musk says that Tesla's free cash flow will be crazy in the years to come. As you can see from this chart posted by James Stephenson, that says Tesla's cumulative revenue update, which, it just continues to grow and grow. Elon Musk says, as measured by cumulative free cash flow, the chart will look crazy steep in the years to come. JR Research says, quote, the comeback has legs, says investor about Tesla stock. Quote, Tesla is focused on the second half growth imperative, moving past the headwinds that afflicted its Q1 performance. JR cites a number of factors that support this optimistic take, starting with the upcoming production of a more affordable EV in June. The investor also notes that volume production for the company's robotaxi initiatives remains on schedule for the second half of 2026. In addition, while Tesla is not immune from the effects of a global trade spat, JR points out the company is in better shape than most due to its North American-based manufacturing. In fact, the investor emphasizes that 85% of its supply chain is USMCA compliant. Still, JR acknowledges that there are reasons to be cautious. Tesla is facing strong and growing competition in the Chinese EV market, while Musk's political affiliations may drive further losses among European and Canadian consumers. Indeed, JR suggests that 2025 could be, quote, a year to forget for Tesla. However, that could end up being a plus for those willing to look beyond the rough start to the year. He says, quote, I believe the bullish sentiments anchoring the stock's recovery have robust momentum, although it may take some time for growth investors to catch up with the optimism. If you have conviction in Tesla's execution of a recovery in the second half, with Q1 being the nadir, I believe the opportunity to add exposure seems apt, concludes JR Research, who rates Tesla a buy. And I mean, really beyond that, there's not too much else as far as news that is impactful to really move the needle for Tesla. Like, there's really not any, large news besides that, right? You could see here on the newswire, there's really not anything today that explains why Tesla would be down 4%. Again, if anything, there's positive news. So this seems like it could be a bit of a pump fake, a crash fake, if you will, where maybe this is not like a super high conviction down 4%. Maybe it's not logical, right? Maybe there could be good news coming. Take a look at option activity. This is something I like to look at all of the time. You have 49 different trades so far today, totaling $17.5 million, so a very low dollar amount with a positive order value of 90%. 90. But the stock's down 4%. Something there doesn't make a whole lot of sense to me, okay? Usually when you see a stock down 4% like Tesla, almost $1 trillion company, usually there's something to explain it. There's not. Volume is low today, so that also makes sense. Maybe there's just not a lot of volume today, and maybe the sellers just kind of took over and the buyers were not able to kind of take it back. Look at this. You have 691,000 shares today that are being sold short. That is a lot. That are being covered, okay? That's a lot. To see the stock down this much, again, just really adds to the whole situation of this doesn't make a whole lot of sense. Now let's get into some of the trade headlines that also sound pretty good. Iran says a deal with the US is achievable if the aim is to prevent nuclear arms. That sounds pretty good. Prevent a war? Yeah, you'd think that would be positive. Now, Apollo now puts the probability of a tariff-driven recession now at 90%. And here's the deal. It looks like we're going to have a negative Q1. It looks like we're probably going to have a negative Q2. The question is, does the labor market hold up? Or does the labor market fail? Just like 2022. I mean, we had 2 negative quarters of GDP. That was a technical defined recession, but we did not have the dramatic weakening in the labor market. Does that happen this time around? That is the $1 million question. That will make the difference in the markets falling another 40 or 50% from here, or rising another 20, 30-ish percent over the next year. Per Apollo, they say CEOs are in distress and consumers fear job losses amid stagflationary shock. Oh, and maybe I found the news that is sending Tesla lower. If this is the news that is driving Tesla down 4% today, just take a laugh with me, okay? Spain's new Tesla registrations fall 16.6% year over year in January through April, while electric cars as a whole rise 54%. Okay, why? Because there was basically no production of the Model Y at all for about a month. Okay, and just think about how backed up kind of the supply chain gets at that point. Okay, so basically for a month or two, there was no deliveries of the Model Y in Europe. That's what this is. Now, Spain, we're talking about a couple hundred vehicles. Like, we're not talking about a big market. So yeah, that would seem like a pretty shitty reason for the stock to be down 4% if that's, the root cause of this. Bank of America's CEO says research team does not see rate cuts this year due to sticky inflation. And you can see Trump's schedule today. Considering I'm expecting a pause on China tariffs to come relatively soon, Bill Ackman's calling for an extended pause on tariffs as well to really give time for negotiations. But there is a couple events today where Trump will be speaking in front of the press, and that's when you could get maybe a China pause announced. I'm optimistic. I don't know when it's going to happen, but it has to happen. Every day that it does not happen, you risk greater harm to the economy. So there's really no choice at this point. Now, Ken Griffin of Citadel said this about tariffs. Quote, people are not going to race to build manufacturing in America. With the policy volatility, you actually undermine the very goal you're trying to achieve. Apollo Global Management CEO Mark Rowan says Trump's tariffs have grounded things to a halt in the short term. Apollo CEO says what Trump admin is doing on tariffs is right, but the approach is wrong. S&P Global PMIs come in at 50.6 versus 51.2. April final services PMIs come in at 50.8 versus 51.4. S&P Global Chief Business Economist Williamson says while tariff announcements mean manufacturing dominates the news, a worrying backstory is developing in the vastly larger services economy where business activity and hiring have come closer to stalling in April amid plunging business confidence. Now, U.S. ISM services PMIs actually beat the forecast, coming in at 51.6. And here, if you give me just a moment, we will look at all of these subcomponents that are equally as important as the headline. So headline beat, business activity came in at 53.7. The estimate was 52.9. So that beat. Employment came in at 49. The estimate was 47. So that beat. New orders came in at 52.3 versus 49.2. So that beat. Prices, though, the inflationary component came in at 65.1 versus estimates of 61.2. So that's where you have a little bit of bad news today from the economic data. Prices, or the inflation component, did surge. Now, keep in mind, ISM PMIs, PMI stands for Purchasing Manager Index. Okay, so high-level officials, if you will, in the services sector are telling you, hey, this is our expectation for business activity, for employment, for new orders, for prices, and or inflationary, inputs. It's not hard data. It's just markets look at this as leading indicators. So take that for what it is. Bill Ackman says the next step on tariffs should be a 180-day pause. Mexico's President Sheinbaum says, I have had good communication with Trump. We've reached deals. And big news today, India offers 0 for 0 tariffs on auto parts and steel from the U.S. U.S. Treasury Secretary Scott Bessent says Trump's tax legislation will prevent Main Street tax hike by making small business deductions permanent. U.S. Treasury Secretary Bessent says Trump tax legislation to restore 100% expensing for equipment, expand full expensing to factory construction, provide tax credits and deductions for research and innovation. Okay, let me just be honest with you guys. This is great. This is great for the economy, okay? Basically, you want to buy a tractor, you buy a tractor. Now you deduct that from your income, boom. Theoretically, you may not have to pay taxes, right? Great. You're gonna, that's awesome. But unfortunately, tariffs are such a larger piece of the pie here. It's such a larger potential influencer that until you get the trade war figured out, nobody's gonna give a rat's ass about the tax bill, okay? Tariffs are essentially a tax, and they have skyrocketed recently. U.S. Treasury Secretary Bessent says U.S. markets are anti-fragile over a long-term horizon. It's never a bad time to invest in America. Bessent says Trump's tariffs, tax cuts, and deregulation agendas are interlocking parts to drive long-term investment to the U.S. economy. To me, this just sounds like a big gamble, to be honest. Like, we're going to do these things and hope they work, especially with tariffs. Being reported by the Washington AP, the Trump administration says it will pay immigrants in the United States illegally $1,000 to go home. Barclays says a U.S. recession is increasingly likely, so it is underweight risk assets per CNBC. Now, again, at the time of recording this video, Tesla stock is down about 3.5% today, trading at about $277, give or take. I think the only catalyst markets are really waiting for at this point is a pause on China tariffs, and I think that is going to come at any moment, and that is the big catalyst. If that happens this week, Tesla stock's going to soar. Now, we also have some other events this week as well. We do have a bunch in store as far as earnings are concerned. But the big catalyst is really Fed Jerome Powell on Wednesday. Now, as I talked about before, nobody's really expecting much of a change from Powell. So if we actually do get a change from Powell, like more dovish or more hawkish stance, again, I'm not expecting that. But if you do see a shift, especially since Q1 GDP was negative, maybe he takes a little bit more of a dovish approach, everyone's expectations of Powell being a non-event actually turns it into an event. So I think Wednesday, depending on what happens over the next 48 hours, could actually be a pretty substantial market moving catalyst. Now, today in after hours, we have earnings from Palantir, Hims and Hers, Ford, Realty Income, some others like Clorox. So yeah, earnings season not over by any stretch of the imagination. Tomorrow morning, Celsius, Datadog, Ferrari, Marriott Digital, and others in the morning. Tuesday, in after hours, Supermicro, AMD, Rivian, Tempest, Arista, Astra Labs, Upstart, Wynn, and Lucid. Wednesday, pre-market, Uber, Walt Disney, Novo Nordisk, Teva, Unity, Vistra Energy, some others. Wednesday and after hours, AppLovin, Carvana, ARM, Cleveland Cliffs, Axon, DoorDash, Dutch Bros, Oxy. Thursday pre-market, Peloton, Shopify, ConocoPhillips, Kronos, Warner Bros. Discovery, and Crocs. Thursday and after hours, The Trade Desk, Coinbase, Marathon Digital, Mercado Libre, Cloudflare, SoundHound, DraftKings, Affirm, and Wolfspeed. And then Friday pre-market, just a bunch of random companies. Again, as I've said before, it's more about sectors this week than it is about moving the S&P's market cap, right? Like moving the markets in general. ARM, maybe Uber, AMD, because of the AI story that's still very much embedded in markets, these could be stocks that could move the broader markets. Other than that, it's sectors like Datadog and Trade Desk, AppLovin, right? Software, Palantir, software, Hims and Hers, more of that retail kind of stock, okay? Some telehealthcare names, right? Cloudflare, cybersecurity, Shopify, consumer related. Maybe Amazon moves a little bit on that, okay? Novo Nordisk, Teva, right? What do they say about tariffs and about manufacturing, bringing that to the U.S.? What impact will that have? Again, you could draw a lot of conclusions from individual earnings. Question is, how much do they move their sectors, okay? That's really the story of this week as far as earnings. The percent of stocks trading above their 50-day moving average today at about 50%. So you're back to kind of a normal range. All things considered, you're not on the high side. You start to get at like on the high side above 65, 70, 75%. Then you're in the upper like quartiles of where markets normally are in a bull market. The CNN Fear and Greed Index today is coming in at 58, so you're definitely seeing a big jump from Friday's close, which is weird, again, because markets are red. A lot of stocks are not doing well. CNN Fear and Greed Index coming in at 58 today. On Friday, it was at 42. So, like, that's a 16-point jump. That, to me, doesn't make a whole lot of sense. But again, market momentum and extreme fear, stock price strength, fear, stock price breadth, extreme greed, put and call options, fear, market volatility is neutral, safe haven demand in extreme greed, and junk bond demand in extreme greed. So it's some of these weird offsetting components that are moving up the CNN Fear and Greed Index, whereas market momentum actually still in extreme fear. Positioning in markets is still extremely fearful. People are not rushing out and buying this market. Last Thursday, April 30th, we actually had the second lowest reading for bullish investors. The second highest reading for bearish investors, okay? I think this was the lowest for bullish investors throughout this entire crash or correction so far. Like, people do not feel good. They're not positioning into strength in this market. Hedge funds and institutions are actually reducing exposure because of the recession risk, okay? And that recession risk being with us is an issue, okay? That's why getting a pause on China tariffs is so critical, because after that pause, a lot of that recession risk goes away, and then inevitably we can kind of get back to looking at the positives of what the Trump administration could bring. That is deregulation, that is lower taxes, okay? Things like this. So I think it's really as simple as that. That's all that matters this week. Do we get a pause on China tariffs or not? If we don't, every day gets more challenging because more damage gets done every day we don't have a pause on China tariffs. I'm optimistic that will happen this week, but it is possible it does not happen. Trump takes it to the absolute wire. We have gotten good comments though, from Trump and from China. So I think it's really just a matter of time. Question is, how far do we fall between now and then, right? That's the big question I have, because I think the pause should have already happened, but, it hasn't happened yet. And we do, again, hear from Trump a couple of times today, so keep that on your radar as well. So let me know what you guys think about all of this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.